Inflation is basically back to where it was when the Iran war started. You didn't like it at that level then.
Yep.
So I assume at this point, even the slight decline that we have seen in recent weeks is not good enough.
Yeah. So first of all, welcome to Jackson Hole, Mike. I mean,
it's always good to be back.
Yeah, it never gets old, does it? Yeah, yeah. Well, it's great to have you. Thank you. Yeah. So if I'm going to be consistent, and I was a voting member last year and dissented a couple times. At the time, even the last Q3, Q4 data for me last year was. I thought we certainly weren't restrictive and maybe even a little accommodative. So we've got work to do. There's a demand element underneath all of the supply conversation that gets talked about that I just need to try to figure out, because for me, we do a lot of informal surveying around the district, and I would say it's kind of a little bit like the FOMC meetings. You've got a half of the people that say, well, it's certainly not restrictive. It seems like it might be close to about right, but for me, I think it may be accommodative on the short end.
How do you measure that?
So it's a really good question. And look, the data sets are massive, right? I mean, what you've got to do, I think, and I even have a tendency to do this, is you got to be careful about looking at, one or two prints. You really have to be thinking about the macro over the micro, because even in the district, I can get around to places, and some communities are booming, some are just doing okay. I mean, I think even about industries, the cattle industry is booming, but the poultry industry is soft. And so you really do have to be thoughtful about that, because what happens to me, and this has been my personal experience over the last 3 years, is we got it to 3, sub 3, and then it even gets harder because you don't want to overshoot with the policy rate decision. So you want some deflation down to 2, but you don't want you want deflation but not disinflation. And so that it gets harder. The decisioning gets harder. But for me, I think there's a lot of demand elements underneath this economy that I think a bit higher rate might make sense.
As soon as September 16th?
So I think for me, giving the chairman some room is important. I think these task forces are going to be instructive. I think the FOMC is looking forward, in my opinion, to those. I think there were some of my colleagues dissented at the last meeting. So I would probably put myself in that camp. But here again, there's really good arguments on both ends of this policy decision. So let's get a little bit more data. Let's see what the task forces are going to say over the next successive meetings. Maybe there's a bit of a reset that we have to make. But for me, I think we're a little on the accommodative side.
Well, if you probably can't make this official pronouncement, but would you assume, as most people do, that October 28th is off the table because it's too close to the election?
I don't think so, Mike. I think we had this discussion about independence. We get in that room. We are able to speak our truth about what we think the economy is doing. I just don't think it enters into the equation. It certainly doesn't enter into my equation. We have a mandate. It's keep prices at 2% inflation and keep employment and labor full. That's a pretty simple mandate. So I can make decisions. I can at least offer my opinion around that and be hopeful that maybe other folks on the FOMC think the same.
If you're saying you don't need to raise rates necessarily immediately and you want to give the chairman some room, what's the balance of risks to the economy given that policy works, as we all know, with a lag?
It does, yeah. So that is the classic decisioning and debate, right? So here again, not to overshoot, and I think that, but here again, we're in the 3s. I think that argument's better when we were in the mid-2s and we were trending nicely. Well, then we had a couple shocks, and now we're trying to work through those shocks. But now you've got this really interesting dynamic of technology demand that's creating really issues with a lot of commodities, be it steel or copper. You've got this kind of flywheel of development around data centers and AI. That's creating some demand, certainly creating some inflation underneath the energy shock side of things. So we've got to really make some hard decisions about, can the policy rate affect those demand elements without pushing your economy into a slow growth or no growth area.
Well, two questions here. And the first one is, does the Fed have a credibility issue? There's a lot of talk about on Wall Street that it might.
Well, for me, I just don't see it. I mean, I think if you look at the two great cycles that challenged the Fed, be it the post '08 and the post COVID cycle, we might have missed a few things early in the 21-22 cycle, but we used policy rates to try to push inflation down. We were trending pretty well. I think we were doing our job. I think we were thoughtful in some of those moments where the labor force was structurally changing, which it still is. And so for me, I think we're doing our job. We just haven't gotten to the point where we can say, hey, we're at a good place. Maybe reminiscent of kind of the cycle of the 90s, where you get inflation down to 2%, you have full employment, and then you start to use your policy rate in kind of a cycle and wave to just keep the economy moving along well. Well,
the second part of that question then is, does Kevin Warsh need to do something to satisfy the bond vigilantes?
Well, look, I've really appreciated getting to know Chairman Warsh since he came around. I think he has a large imprint in his career about what he believes and what's important, how he views the Fed's mission, so I think every time that he has an opportunity to speak, I think he's going to add to the discussion about how do we fulfill our mandate, because he believes strongly in it. So I'm like everybody, I'm looking forward to it, and I think he'll impress. He always does.
I'm sure you read the commentary from the Wall Street analysts who say that Warsh needs to tell us his reaction function. So to be fair, what's your reaction function?
So I think that probably is the focus that we're going to talk a lot about that comes out of these task forces. I mean, I think things like data and communications are going to be really key of the 5 task forces to say, okay, is there a way to reset this kind of post-pandemic relative to what we did before and what we need to do going forward? And so I think we've got big issues, and this economic symposium here in Jackson Hole is going to talk about financial innovation. It's going to be talking about things like that are important to me, things like instant payments and how the market supplies that instant payment pipe with liquidity. And so there's going to be a lot of things that come out of this in the next 2 or 3 days, including his speech, that I think are going to be very additive to how we fulfill our mandate.
A couple of things on communication. Do you think that the chair should continue to do news conferences after every meeting?
So for me, I think about that as from what I do as a Fed president, and I'm a transmitter of information. So I go around the district all the time. I have roundtables. For me, the Kansas City Fed's kind of a power utility center. I'm the conduit of information. So it really is kind of a personal, how do we want to fulfill our duties and our mission? I bring information from the FOMC table to my constituents here. I take what they say and I listen to them and take it back to the FOMC table. I think he has a much more macro role in that, and I think he'll decide how he wants to do it.
What about the idea of moving back to 6 meetings a year that was discussed at the last meeting?
So here again, I think there's around data and communication, I'm going to be really fascinated at what things we can do relative to giving us more time between meetings and bringing that data more real time. I hope we can get there. I hope we can use some of the technologies that are out there today, be it AI and other technologies, to really pull information forward. And I think fewer meetings might make us more effective if we have more information, but that information is going to have to be more real time than it is today.
Yeah, but everybody who works in the research departments at the regional banks and the folks at the Fed in Washington and the folks at the statistical agencies say we are using real time information. We have contracts with a lot of companies that are giving us data in real time. What are you missing?
So there, I think there's, I would disagree with that. I think there's too much lag in the information that we get. I think that there's ways that we can connect. I'll give you an example. I'm a former banker. We would submit call reports every quarter. By the time the examiners would look and analyze that information, it's probably 6 weeks after the quarter end. If we could connect closer with the banking industry to actually maybe electronically be connected, maybe we can get more real-time data from the banking industry specifically that would really bring that. It would today a call report looks like a slow-moving vehicle to what AI can do today. So the connectivity side of it, we can do better.
One thing, as the last question I want to ask you, is that you look around and you see all of the television set up here and all of the people who come to this event. What do you think of the symposium and the way it's evolved over the years? Is it still true to what the original founders wanted?
So there's a special sauce to this symposium, no doubt about it. It's our 50th year next year. I mean, so something's working. But I tell people that ask, there are really three elements to this symposium that make this effective. One is, I mean, obviously it's a great place to be, right? So we give the participants an opportunity to explore Jackson Hole and the region. Two, Joe Gruber, our chief economist, has one of the hardest jobs because he and his team have to decide what subject matter is going to be relevant in August, and you have to make that decision in the November prior. And so you hope that subject matter is relevant. He's knocked it out of the park this year with this whole financial innovation and payments business that's really going to be disruptive over the future. And then the participants and the way we're able to get in a room and debate some of these things that are happening. Chairman Warsh's speech on Friday is going to add to the conversation on Friday and Saturday, and we're going to wake up on Monday morning and have new thoughts about what's happening in this economy and what the Fed should do. And so it seems well timed, but the sauce is really about the people involved in it.
Do you have any idea what he's going to say?
I wish. I don't. I'm a warm-up act here, Mike. So.